Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, November 4th, 2021. It is 1:21 p.m. as I'm starting the video, and here's what I'm going to go through. A quick update on the equity markets. There is a development, a potential development, something I'm on the lookout for. I'll get to that in just one second. Then I'm going to follow up in this order. Quick update on crude, the euro, gold, silver, the 5-year Treasury note, Treasury bond. And then a quick overview of the agricultural input sector. I threw out an individual stock trade idea today. I've been kind of light on the individual stocks for a while now, and for various reasons, but I'm going to follow up on that trade idea that I sent out today for Yield 10 Biosciences, and then just a quick look at the sector. There's not a lot of stocks in there. All right, so what I want to start out here on the equity markets is we have that clean up trend line, and we're still above it. So we have absolutely zero sell signals at this time on this 60-minute chart. But what the development I wanted to point out, if you followed me in the past for years now, and I haven't really seen one of these in a while or talked about them, but early on, and when I started really getting into technical analysis, I noticed that sometimes, not very often, but sometimes you'd have a very nice clean rising wedge pattern, or even a bullish falling wedge pattern, which is the inverse of this. This is a bearish rising wedge pattern. And as I said yesterday, I expect a breakdown. I think it's imminent, and I still do. Now, what this is when you have that clean divergence and a nice clean wedge, even the upper trend line has a lot of reactions. It's once in a while I'll notice what I call a wedge overshoot, and that is you have a very impulsive spike, just like this, exactly like this, up above the wedge. And then, now I want to say this is very important. That's not a sell signal. It's just something I'm on the lookout for, something that I've seen this happen before, and I think this could play out here. And that is a wedge overshoot, which means you pop above the wedge, but then pretty quickly, and quickly would probably be tomorrow, no later than Monday, you reverse. And then you come back down into and below the wedge. Now with a wedge overshoot, again, from my experience, there's very little, if any, reaction. Once you come back in the wedge, you just come on and keep going down, and then you break down below the wedge. And so that gives you the overshoot there. So again, it's a 110% only a potential, something to look for. But if it is, and again, wedge or not, you want to draw the line different, you can do that. You still have divergence. I'll move that line up right now and show you. The divergence is still in place. You have roughly equal highs here on the PPO. With higher highs in price, that's still negative divergence. Just the same with the RSI, slightly lower high. Oversold right now, extremely oversold, about the 80 level on the RSI. And again, so that's what we watch for. So the sell signal, whether it's a wedge overshoot or not, remains on a break below this trend line. And I wanted to point that out. And by the way, these are pretty powerful patterns when you get them, because what that does, at least my interpretation of that, when you get that strong impulsive thrust up to overshoot the wedge, it's the busting out, the final capitulation of a lot of shorts and bears, and also a lot of euphoric long buying. It's a buying climax is what it is. Saw that on Shiba last week, and that Shiba, and it was one of the crypto coins, and same thing. It was a clear buying climax, and that crypto's been falling since then. All right, so we'll see. Again, we'll just follow up. Let's not spend any more time on it. I think I made that pretty clear, what to look for and what it could be. And this is what it looks like on the futures, NQ futures. You still have the clean up trend line. You still have the wedge. And again, this may prove to be a momentum overshoot. And your sell signal will come if and when we break below that trend line. And then you have the targets that I've already laid out. Remember, when I give you charts like this, and I do these arrow breaks, that's where a reaction is likely. I'm just not drawing out every minor squiggle. That's why the arrows stop. Those are each of the levels if you're swing trading. And I'll give you one more right now, actually. Initial support, if you're an NQ trader, is going to come in right around there. Minor support about 15,932 or so. Next up, crude oil. Still that divergent high is still in play. The sell signal is still very much intact. We had the impulsive breakdown. We did crack below that 80.75, snap back up, but look, just went for a back test and then an impulsive rejection. let me zoom in a little quicker. This is a 120-minute chart, so every candlestick is 2 hours of trading, but there it is. So there's your nice, clean, well-defined trend line, impulsive breakdown, and we were halfway down to that next target and had a little blip back up, but that's effectively a back test, and here it is. So right here, zoom in nice and tight, you can see there's some near-term support right around here. This is where, again, these are 120-minute candles, and look how many have hit there. So that's what you want to see if you're short, or if you're looking to get short. Again, this was objective entry number 1 right here. Objective here on the breakdown, although it proved to be a little whipsaw there. We snap back above, but objective again, a back test or a near back test. You can draw the line. Anytime I'm targeting a resistance level, you want to step in, because sometimes the sellers will step in just shy of the resistance level. And again, that trend line may have come in like that if you tightened it up a little bit. So again, that's by all means a back test. And so that's it. So breakdown, back test, nothing else. Nothing else to really add to that, other than we still need to take out the next resistance level or support level, which again we have the lows right there, the recent lows, and then 78.90, which is also the next price target, and then 75.72. And next up, the euro. Whether it's a pure play trade, you can trade the euro off these charts if that's your thing. FXE is the ETN. And just like trading treasury bonds, currencies don't move a lot, so you need a large position, and that's why most traders will use futures, trade Forex, things like that. And you have the divergence that's still very much intact. We're effectively just a slightly marginal new low, but look what we have here. That same divergence that we had in place when this falling wedge broke out right here is still very much intact. We're back testing, and now we have that actually a quadruple low, really 4 reactions around that 115.45-ish level. And we also now have, which we didn't yesterday, we now have divergence here on the PPO. This divergence has continued to build on the RSI, but then you have this point from right here to there, and look, anything can happen. The euro can break down. There's a tremendous amount, unprecedented, manipulation with the forex market, and it's not guised manipulation. It's out there. I mean, the central banks are controlling their own currency. It's really a, between the obviously the ECB and the Fed. The euro is the largest component of the U.S. dollar index. So depending on what they're doing, and lately the market's actually kind of dismissing and shrugging off. I'm reading that and the headlines and seeing it that they're, personally, I think Powell, I don't. Well, let me just say that the market, like myself, is already discounting what Powell's saying, and the market's expecting more aggressive rate hikes. He continues to be flippant about the risks of inflation, and so I, like many others, believe there'll be some aggressive hiking next year. Plus, the ECB is also doing that. So you got to remember, it's an offset. It's really who's going to be more hawkish, or who do traders believe will be more hawkish, because rising rates from one currency, if the U.S. raises rates, that's bullish for the dollar. But of course, if the ECB raises rates more, or there's an implied a chance of increased rates in the market, that's all that really matters. Not as so much as what they do, but what the markets think they're going to do. That's what trading's all about. That's why sometimes a relatively ugly or bad stock is going up, or a good stock is going down, and it's really all about buying and selling, supply and demand forces. But all right, so enough on that. Let's just keep it very simple. There's a euro at support. Divergences are still in place, and if it can rally here and move on up, then that's going to be bullish for gold and silver. All right, let's just watch it. Now, if it falls apart, moves down impulsively, and it's anything more than just a brief whipsaw, and then these divergences get taken out, then that's just not good for the euro. It's going to be bearish for the euro, bullish for the dollar, which is in turn bearish for gold and silver. All right, so that brings us up to those two. Here is gold, GC, 120-minute chart. Remember, I've been covering this quite a bit lately, so I'll just say we hit that divergent high, that 1809 target several times, pulled back, And yesterday we were at that 1766. I mentioned that's an objective long entry for you on gold and silver. We had, and you got a nice trade out of it. And now it's running up for another back test of that trend line. So to me, very bullish if we can regain the trend line and take out that 1810-ish level with conviction, and then especially that 1838 level. And I'm still leaning that way. Can't say it with the highest confidence because we just broke trend and put us on a near-term sell signal, and now we're backtesting again. So we need to start undoing the breakdown, and that'll show that, hey, these divergences, even in a bull trend, they usually play out. But what happens is in a bullish trend, negative divergence tends to play out for a much smaller correction, either small in price, relatively small, or sometimes you just correct sideways, or a little of both. So we'll see. Time will tell. But either way, it was a good entry yesterday. You want to take the quick buck, just trade off these reaction highs. We ran up right to that reaction high there. So what is that move? Is about 2.3%. Call it 2% if you want to round down. Not a bad trade for a one-day single move. And then silver to the button, hit my 23.055 former resistance, now support level. That was also mentioned as objective long yesterday. The move on that has been close to, right at about 5%. So you made a nice buck on silver, nice quick trade if you bought it there at support yesterday. Again, which was mentioned as an objective long with a stop somewhat below. And you're back to that previous reaction high. So you either take the quick buck or you got in good. If this is it for the correction, then silver should, and I'm leaning that way, come on up. We've already hit my 24,867 target once right here. That's where we stopped. Gave you the chance to book some profits after that nice run up and recycle back in here. So we may or may not have a reaction. The fact we already had the initial reaction, I don't know. Your guess is as good as mine. It's still resistance, probably a little bit of a reaction at least, but either way, you probably don't want to try to game the pullback. I like to game pullbacks at times on the initial tag of a resistance level, especially if I'm favoring higher targets, not the second or any subsequent tags. Then I wait for a breakout above that level, and that's what you can do as well to add to a position or maybe take a position if you don't have one, and then swing up to the next targets there. So this will be largely, not exclusively, but largely dependent on what the euro does. And again, that's silver 120-minute chart. Next up would be, let's cover the 5-year Treasury note, ZF, quick update. Liking what I'm seeing. There's the breakout. There was our divergent low right here. Positive divergence. Breakout back test. We hit my 122 target recently, pulled back, and it was resistance, still is. Now it was taken out. I should say, I'm sorry, not is anymore. Resistance, once broken, becomes support. So that's how it works. 122, any pullback to that level would be objective, but you also have a breakout, so you can go long. You don't have to back test it. If you do, it's objective to go long with a stop somewhat below. Next target 122, 144. And you know what I'm going to do is an update on ZB, because I mentioned ZB. You could even use that as a paired trade. I'm more bullish on the 5-year than I am on the 30-year, and you can even make a case to short because we had this bearish rising wedge. ZB, the 30-year bond, broke down from, hit that, pulled back to that 129, 240 support bounce, and we're back testing right now. I'd rather just pure play ZF, the 5-year, at this time, because we may push up we have a pretty good resistance level there that hasn't been checked yet, 161, 236, and I could see the potential moving up there. And so at this point in time, again, ZF is my preferred proxy, staying with those shorter term bonds. And that brings us up to the ag input stocks. And we'll wrap this video up. I'm going to rifle through these quick so the video isn't super long. I'm going to start out with, let's do the, well, might as well start with the yield 10. That was the trade I did today. Let's see. All right, so gave you a daily chart. I gave you a cleaned up version. This is the one we've had trades in the past on this one, including this breakout. I posted that in the follow-up post. I mentioned it back here on a break above $7, and we ran up there, and that was about 240% run right there in a matter of 1.2 months, I think it was. Put in a little divergent high right there at the top, There's your divergence lines, and then corrected, brought us back down here, and again popped it again. These are levels. They were my levels back then. I haven't modified these lines in a while. This was created back in November of 2020. And this one was created back on June 17th of 2020 and updated. Looks like I tweaked it on August 5th. Sometimes I get moved. This one was created back in June 2nd of 2020, and there's still the levels that I think will come into play. You can see that we popped it there, kept going, pulled back, back test. Anywho, that's where we're at. So we hit the 842 level, and this is usually the case. That's why I list multiple targets. This is I gave you a cleaned up version of this today, so you wouldn't look so busy. Just a nice clean downtrend line, positive divergence, big falling wedge, and we popped that level. Took out that 7-ish resistance, went right up, had a momentum fueled overshoot. That's what I call it when you have a lot of velocity heading into a resistance level. You tend to overshoot, just like a fastball going into a catcher's glove. It's not going to stop right when it hits a glove. That catcher's hand's going to snap back due to the velocity and the momentum, and then come back forward. And that's exactly what happened there. So you would have still got out. So I measured the gain. It was 18% gain up to 823. Little momentum fueled overshoot, give you a chance for active traders to exit. And we're still, I said anything down to the 7-ish level, but I wanted to show you this. This is why I want to do the video. There's some support when you look at on this 5-minute chart. We're right at support. So again, this is why I wanted to update this one. See right here, this is the, again, 5-minute candlesticks we're looking at, and you can see them right here. That's where it really broke out today. It was a little below on the daily chart. Yes, I had my line at 697, a little bit below that, because that's where the daily candles showed best. But when you look at the intraday chart, this 5-minute chart, there's your breakout candle right there. You see the buyers step in, high increased volume. Volume continued to rise. There was an intraday buying climax there with that big spike in volume, and it's pulled back, and so far it's holding that support. So I'll make it very clear. This is where I think it's still an objective entry, whether you took it at 7 and had too tight of a stop, got stopped out. At this point in time, and remember, it's a volatile little thing, so it's not a hard line. When I put the line there, you can see these are little intra-period spikes, but you came back up there, and this is where all the 5-minute candles are closing. Again, right about about 680. And so PPO is looking constructive, turning back up here at the 0 line, and I think this one has a decent chance of running up. We already hit my first target once, and that was the initial tag. So at this point in time, if the buyers can step in here and get it back up, I'd really like to see it close back above 7 today. Even better if we get a late day surge, some more buyers coming in to really ramp that volume up. And what it does, it puts it on a lot of traders' radars. It's already got high volume, really high volume. I don't know if you can see it there, but I'll show it to you. There's the volume bar. You can see this is the biggest volume since, look back here. See this volume bar? That was comparable right after that last time I pointed out as a breakout above $7. And look what happened. Started taking volume, and boom, that's all she wrote. So no guarantees. It might not have to repeat itself, but I like the setup. Now, with that being said, I'm going to go over the sector. There's more of a mixed bag. I'm just going to start at the top. I have a watch list that's just to the right of this video capture. You can't see it, but I have a basket of about a little over a dozen and a half input stocks, and I'm going to go over those real quick for you. And let's start with the sector itself. So here's the sector on TC 2000. It's IX 1010, and it is looking ripe overall for a correction. We've had some divergence building for quite a while. There's your negative divergence right there, and starting here really. And there's a potential. I'm not crazy about that uptrend line because we only have one tag there and a couple tags recently, but either way, you can see the divergence forming. And so now what I'm seeing is a lot of the bigger stocks, I'm going to start in order of market cap, those are the ones that are looking toppy to me, and those are the ones I don't see. If anything, I see more attractive risk reward to the downside. Now, why am I doing this? Because I always say birds of a feather flock together. If I want to be really bullish and want to hold out for longer term on, let's say, that Y10 or YTEN yield 10 biosciences, I'd like to see the vast majority of the stocks looking bullish at the same time. That's not the case. It's a mixed bag. There's some bearish and bullish looking charts. Now, they're all in uptrends, or almost all of them, that is. But this one, what I see here, NTR, is a breakdown here and a back test and big divergence building. I haven't updated that, but there's your divergence line. So a lot like the sector. And remember, this is a bigger one. This is a 38, almost $37 billion company. So it's going to have a higher weighting on that sector I just showed you. Breakdown back test. There's a big bearish engulfing candle right there. So if anything, I don't have a position, really don't care to, but I'd rather be short than long that one right now. CTVA, same thing. You had a divergent high here, and you have a trend line here that was recently broken. You have big support right here, 40.77. It's been holding that support strong lately. It's rallying, but right into the trend line. So, you know, if it can regain it, great, that's bullish. But otherwise, this one probably, you could make a case. If it falls back below there, we're a hair above it now, you'd want to see rejection off the trend line. Swing it back down to 47.7, and then another sell signal would come, and even a more powerful, very powerful sell signal on a break of that level. Very thin. I think it's going to fall down to 32 if and when that's broken. Now, there may be more upside left in this one, so I'm passing these along. More of an analysis for the sector. You could take it. Personally, I'm going to pass on this one for now, but I'm going to keep an eye on it. MOS, Mosaic, this is again one of the biggest ag input stocks, big fertilizer company. There's your divergence, negative divergence. And we just broke out right here, that 37 level, and we're back testing it now. So a case can be made to step in by the back test with a stop below. So there's a trade idea for you. I'm not crazy about it because of the divergence, but it may work. And if it breaks that level, if it fails to break out, drops below 37, it's probably coming back here at about 29.85 at least. Possibly more. We'll see. CF Industries, divergent high. Recent breakout. Breakout was really right here, 55.24. I came to that reaction high right there and these reactions. So there's a case of a breakout to new highs and a back test of the breakout level. So, but on the flip side, divergence. But, you know, PPO can turn up. Maybe the divergence gets taken out. Let me be very clear. Every stock I've covered so far in the sector, including the sector, is clearly in an uptrend. So you've got to give the, you know, if you're going to flip a coin, say, well, do you want to play this as bearish or bullish? Well, until you get some decent sell signals here, and you don't have those right now, you have to say the sector's still bullish. FMC, now this one's nice. I told you there's some that I really like. Positive divergence, bullish falling wedge, breakout. The traders didn't get the memo until just yesterday, but this one's now starting to run on volume. Big volume yesterday, moving up today. There was a little, you know, potential bull flag type action going on right here on the 60-minute chart, and that could carry us up to, if that plays out, could carry this one up, yeah, right around there. I'd say 122.19 or so. ICL, little, again, divergence building. There's a trend line to watch. It could trigger a short entry or a sell signal, I should say, and then pull back to there. Minor trend line, and then the more significant uptrend line down there. But it's in an uptrend. I don't really have much of an opinion. I'd stay away from that one personally. SMG, this is a nice looking. See, this is my kind of chart. This is one of the few that's been in a downtrend lately in the sector. But simple stuff. Watch, rinse, repeat. Last time we put in a divergent high there, it led to this correction. So far that correction ended with a divergent low, and look at that nice bullish engulfing candle. Let me turn my volume bars down so you can see it. 1 second there. There we go. Something like that. And look at that bullish engulfing candle. That's what you want to see after a prolonged downtrend. Don't, you know, if it's random, it comes near in an uptrend or a sideways trend, it doesn't mean anything. But when that body of that candle engulfs the previous candle or more, and then you have follow through, which you did, and you can see after the bullish engulfing, it broke out of the primary downtrend line as well, went sideways for a while, and then boom, broke out of that trading range yesterday, impulsive move, follow through today so far. So there's another one that probably has more upside to come. LWLG, I'm not even familiar with this one. I have charted it. I don't have much of an opinion on it. Let's just move on. UAN, again, divergences, maybe a megaphone pattern there, but divergences are not a sell signal, and I don't see any on it right now. So we'll move on. IPI broke this minor uptrend line recently, and it's kicking back, but it recently put in a divergent high. Again, this is one of the bigger ag input companies, Intrepid Potash. BIOX, a little downtrend line there that could bring in some buyers have taken out, and then on the flip side you also have support down here. It gives you a little symmetrical triangle pattern, and whichever way that breaks is likely to determine the next trend in that stock. And that's an inherently neutral pattern. It could break either way. Indicators aren't telling me much. AVD, here's a nice one. Yeah, nice downtrend line, positive divergence, and you tag the primary trend line. I wish I was looking at this one back then. American Vanguard Group, you hit the perfect tag of the uptrend line that starts back here with quite a few reactions, and then we broke out of the downtrend line, been moving up. We took out the 1542 resistance level, and again, these are lines. Let's see, I've had that there. Created that line back on August 5th of 2020, and it continues to respect this level. These are levels. This is what technical analysis is all about. This is where traders come in and broke out. It was bullish, a back test, and a rally. And so it took it out recently. Breakout, back test, rally. Probably going to go up to at least 1670, but there's not a lot of meat on the bone to that until that target. Now, if it can power on through there, next stop should be about 18. MBII, this one, not crazy about the chart, but it's flirting with that $1 level. And quite often when these stocks dip below $1 and then recover $1, by the way, $1 is right here. I have a line about 99 cents, call that $1. Then that's usually bullish, and they run because they sidestep the risk of being delisted. If they trade for under $1 for too long, they will get a delisting notice. And so sometimes traders will rally it if they can regain that $1 level. Very speculative. I'm going down. Keep in mind, as I'm doing this list, I'm going down to smaller and smaller market caps, and so you get higher risk with these smaller ones. CGA, if you've been on the site for a while, for years I've traded this sector on and off, mostly long in bullish setups, pointing out divergent lows, breakouts like this one would have been back here somewhere. I think the buy signal was over the 309 level, and that you can just see how much this one ripped from 309. I won't even go to the lows. I'll just pick, because I believe that was the breakout on the last long entry back here in late 2020. And that one went from 309, if I can grab it, or close enough, there's 311, to my max target, and just had a brief momentum fueled overshoot for a 470% gain. And then we put in a divergent high, negative divergence, and that was the correction that followed. Right now I don't have an opinion on it. I'm just trying to show you how much these little low price suckers can move. And don't underestimate, just how overbought they can get, or how far and fast they can go when they want to run. Arcadia Biosciences, RKDA, nice looking setup right now. No buy signal yet. There's your falling wedge pattern, positive divergence confirming the wedge. So I think a pop above 213, a solid break above that, should do the trick. First target's there, a zone about 238 to 245, and then all the way up to 310. I think there'll be a stop along the way probably, or at least a hiccup. So I'll give you that level now, 268. So there's your targets. About 240, 268, 310, and maybe more. We'll see. Again, a lot of the big ones in this sector are starting to look a little toppy. And I look at this as it's like a game of musical chairs. As long as the music's playing and they're still in an uptrend, and there's a lot of this market's rife with speculation right now, these little suckers can pop. And that's where I see the best RR, risk reward ratio. They are aggressive, low volume. Yes, I know I always get that in the comment section. I do my best to try to identify or clarify which trades are high risk. So if it's not your cup of tea, pass on them. And there's that YTN so far holding up around that, yeah, right around the $7 level. So it would be great if it happens today and they ramp this into close. If not, you'll have to decide if you're buying it here on that pullback to that, the what I say 680-ish support. Anything can happen overnight, and that's the risk in these guys. This stock can gap up or down really big, but again, so far so good. I think you're going to see it picked up on a lot of traders' radars today. Remember, I had a different board here for you earlier. That's what it looks like. All right, we're almost done. Seed, SEED. This one's moving off. This is a big support zone right here, about 777 down to, what's that other number, 727. I'm going to turn that line back up because we hit it twice recently. These are, again, old levels. I haven't even had to update these charts. These suckers trade so well to the technicals. These are old lines. Well, I modified it right now, so it's going to show modified today, but updated. But this was created back in September 27th of 2021. Wait, did I do that then? Yeah, I guess I would. Yeah, okay. Yeah, I would have done that recently. And that one was created back in June 15th of 2020. But where I'm going, you can see we've had a lot of reactions there and a few spikes down to the bottom. There was another spike. So now that becomes a pretty significant level. But the top is still also support, 777. And it's holding there. So ideally, you want to buy close to support if that's what you're going to do, with a stop somewhat below. But we've already kissed it a few times, and we've also hit the 1081 level. This is the big level. If you're going to swing this one up, I think that would be my next target. Again, 1439. There's a line that's been there since created back in. No, I must have added that on September 1st. There it is. So either way, because of these two reactions there and a reaction right there. All right, guys, that's it. I went over everything I wanted to, and not too bad. 31 minutes. We covered an entire sector, at least the majority. That's not every single ag input company, but most of them. And gave you some setups there in addition to the yield 10 that I threw out this morning. This has been Randy Finney with Right Side of the Chart. Have a great day.